What's up people, in this video I'm going to break down the supply and demand strategy that I've added to my trading playbook and will be using from now into 2026 and beyond. I called 90 pip gold buys on stream this month and I'm going to explain how to find the supply and demand zones and entries by using 5 steps in the setup. I'll also show you a few examples from trades that I've taken recently. Alright, let's get into it. First step is identifying the trend. I use the 5-minute time frame because I want to be in and out within a few minutes to hours. You can use different time frames though. Using between the 5-minute and 15-minute time frames is good for scalping, but I would also recommend the 4-hour if you want to hold for longer and don't have the opportunity to look at the charts for long periods of time. Once you've identified the trend, the second step is to wait for a break of structure. In an uptrend, a candle needs to close above the last higher high, and for a downtrend, a candle needs to close below the last lower low. The third step is identifying your supply or demand zone. For buyers, you need to find the last bearish candle before the bullish push up that broke the structure like this, from top to bottom wick. For sells, you need to find the last bullish candle before the bearish push down that broke the lower low like this. Now you have your zone, we're at the fourth step, waiting for a retest of the zone. I need a 5-minute candle to touch the zone or close inside but not break through the zone. Okay. When it comes to entries, I do have a few entry types depending on how the zone has been retested. The first entry is when the zone is tapped and the next candle flips in the direction of my trade. Then I'll get in at the flip. The second entry is when the wick taps the zone. I could get straight into the trade using either a manual entry or limit order, but this entry is better when the trend is strong. Third entry is the break of the candle after a closure outside of the zone. So it could be a break of a high or break of the low. Stop losses are always at the end of the zone no matter what type of entry you take. Take profits are always at least 1-to-1 or 1-to-2 risk reward. Let's look at these trades that I've taken recently. This is a trade I took on Wednesday, 5th of November during Asian session. Daily candle was bullish and there was a 5-minute support holding price. Looking at the structure of the 5-minute candles, price wasn't making new lows, but price is making new highs. Therefore, I was looking for buys. I marked this current high because this would be the break of structure. And always use the current high from the time you get to the charts. Once the high was broken, I marked my demand zone. And it's this last bearish candle before the push up, so top wick to bottom wick. When price pulled back, this 5-minute candle tapped my zone and closed just above it. I took a candle flip entry here and the next candle made a bottom wick and I got in when it flipped bullish. Stop loss was around 40 pips. I took a 1-to-2 risk reward and closed around 81 pips. Now because you have your zone marked out already, you can already think about how much risk you're going to take. This stop loss was only around 40 pips, but I have had bigger stop losses up to 100, 120 pips, and I adjust my lot size accordingly. I'm not looking for multiple trades per session. I'll take one trade and move on to the next session. Also, when I'm looking for trades, I'm looking at all the confluences. In this one, I had a 5-minute support, I had a 5-minute double bottom, I had a 5-minute continuation pattern, and the 4-hour and daily candles were bullish, so the buys were looking good. Let me show you some sells. So this is a trade that I took on Tuesday, 4th of November during NY session. Price was pulling back from the highs. The 5-minute was forming bearish structure. I marked this recent low here and waited for it to break. After this big sell, I marked my supply zone, the last green candle before the sells, using the top wick in the structure. At this point, I need a retest of my supply zone so I can get into my trade. Got the retest here. I waited for the bearish candle to close and took an entry at the flip of the next candle. Stop loss was 120 pips, TP 240, 1-to-2 risk reward. Now this trade did go into a 100 pip drawdown, but I held and let it run. I actually reduced my stop loss to 50 pips when price started making lower highs and I closed at 110 pips, but price did go to TP. With a TP this far away, if I got another entry when I was in profit, I would have taken it, but I wouldn't add positions if I got a setup in drawdown. In fact, let me show you a trade where I did add positions. So this is a trade I took on Friday the 7th of November during Asian session again. So price was pushing up from the daily flip, M5 was creating bullish structure. I waited for resistance and a high to form, and then once it broke, I marked my demand zone, took an entry at the retest, stop loss at the bottom of the zone and let it run. Then after the bullish candle closed outside the zone, I took another entry at the break of the high and closed both positions at TP1. So I do have some tips for using supply and demand. Now, as the trend is pushing, you can adjust the breakout levels before you find your supply and demand zones. So high and lows that have support and resistances are better for breakouts than just using the candle wicks highs and lows. Look out for higher time frame key levels, so 30-minute, 4-hour levels to be respected, because you can get reversals off those levels. So risk management. Stop loss sizes do vary with this strategy. I do use a bigger lot size for smaller stop losses, 50 pips and below. For bigger stops, I use a smaller position, but look to add positions in profit and close at TP1. This strategy works in Asian session, London, and NY sessions, so no matter when you have time to trade, you're good to go. If you do try to add this strategy to your playbook, then come back to this video and let me know in the comments how it's working out for you. If you enjoyed this video, drop me a like and hit that subscribe button and join my daily New York session streams.